Welcome to the FX Terminal Weekly Market Review. Here's what moved the markets last week and what's ahead. Last week was driven by inflation data, labor figures, and central bank decisions. The week opened with softer Canadian CPI, reinforcing the disinflation trend and keeping the Canadian dollar under pressure. Tuesday delivered a heavy round of US data. ADP Employment rose to 16.3K, beating expectations but still signaling weak hiring momentum. Non-farm employment change came in at 64K versus 51K expected, adding to the labor market picture. Core retail sales jumped 0.4%, showing resilient underlying consumption, while headline retail sales stalled. At the same time, wage growth slowed to 0.1% and the unemployment rate rose to 4.6%, both worse than expected. US flash PMIs also disappointed, particularly in services, pointing to cooling momentum and weighing on the dollar overall. In the UK, labor data and flash PMIs were in focus ahead of policy decisions, with flash manufacturing PMI at 51.2 versus 50.3 expected and flash services PMI at 52.1 versus 51.6 expected, driving GBP volatility through the session. Wednesday saw UK CPI print below expectations at 3.2% versus 3.5% forecast, while New Zealand GDP surprised higher at 1.1% versus 0.9% expected, moving both GBP and NZD. Thursday was the main policy day. The Bank of England held rates at 3.75%, with the vote split at 0.05-4, signaling ongoing debate as markets assessed the path forward. The ECB also held policy steady with the main refinancing rate at 2.15%, keeping the euro sensitive to guidance through the press conference. In the US, CPI came in cooler at 2.7% versus 3.1% expected, while unemployment claims printed 224K, broadly in line, reinforcing signs of labor market cooling and weighing on the dollar overall. Friday closed with the Bank of Japan holding policy unchanged, offering no new tightening signals and leaving the yen weaker into the weekly close, while UK retail sales fell 0.1% versus 0.3% expected, adding downside pressure to sterling. Crypto markets were volatile but stabilized into the end of the week as easing rate expectations supported risk sentiment, while gold and silver firmed, supported by softer inflation data and safe haven demand. Next week is quieter due to the holiday period, but a few releases remain important. Tuesday brings Canada's GDP, with markets watching for further signs of economic slowing. Later in the US, preliminary GDP will offer an updated read on growth momentum. Wednesday features US unemployment claims, providing a final labor market check before year-end. Thursday, attention turns to Japan as Bank of Japan Governor Ueda speaks, which could move the yen given ongoing policy sensitivity. With thinner holiday liquidity, even limited surprises could trigger outsized FX moves. Stay tuned with the FX Terminal for clear and verified market coverage. See you in next week's review.